Good afternoon, everyone, and welcome to my latest series in crypto webinars. My name is Michael Briody, and I am an FX and crypto specialist here at Bloomberg. Some countries are more friendly than others when it comes to leaning into cryptos. And today we're going to focus on regulation. Will governments lean in and partner with cryptos or get left behind? So just some quick housekeeping notes. These webinars are intended to be not intended to give investment advice and are meant to be educational. And there is a questions tab on the monitor there, so please click on that to ask any questions. Today, my guest is a friend and a colleague of mine that I've seen at a lot of these conferences that we go to. We've had a lot of discussion, so I'd like to introduce the CEO of Ether Capital, Brian Mosoff.
Thank you for having me, and happy to chat all things, regulation, crypto, history of the space. So glad to be here.
Yeah, I really appreciate you taking the time. I know we've had a lot of conversations on different topics in the space, but it seems the most heated ones become around regulation. And I think there's a massive appetite. I talk to institutional clients, I talk to corporations, and I think this is the one thing that's kind of holding people back, or holding companies back, or just holding the ecosystem back a little bit.
Can I add one thing just into that?
Sure.
It's not even the regulation is a hot topic. It's what is this asset class going to be? It largely was pushed to the sidelines for the first, decade plus. And now as it's grown into this trillion plus in terms of just assets and then companies, now there's this real duality between financial institutions, traditional finance, the infrastructure that we have in, the world up until today. And then now you have these digital assets that kind of really go against the mold. And what are they going to be? Are they going to fit in? Are they going to replace it? And that's where, to me, there's this really abrasive conversation taking place.
Exactly. And I think that this is one of the reasons why, like you said, this topic comes up all the time, because the change is happening so fast. Before we dive into this, tell me a little bit about yourself, Ether Capital, how you got into the crypto space. I know you got very early on, you were involved in this space.
So I discovered Bitcoin back in 2012. I heard about it through kind of a random run-in with someone, helping someone basically buy a used iPad off Craigslist. And like a lot of people, the guy was literally selling his house, his cars, selling it for Bitcoin. We're like, what the heck is that? Sounds insane. And this is, I think, like a lot of people, when they first hear about this idea of it's money on the internet, it's run by an algorithm or software, and it's not backed by anything. It's not tethered to an institution, a government. It's just its own thing. And you're like, what? That's too crazy. That's not going to be a thing. Especially in the early days where it was really hard to get social validation from friends or people you knew who you thought were tech. There was no one who knew about it. And also you needed people who were techie enough and open-minded enough to go down that rabbit hole and say, what's really happening here? And so like a lot of people, they put it in a drawer and ignored it. I did that. I read a little bit about it. And I don't know. And then it continued to pop up on the front page of Reddit, a website that I'd always be on. And this is now 2013. And there was clearly this very passionate group of developers and people talking about monetary policy and distributed computing science. Well, maybe there's something here that's worth doing a deeper dive into. And I did. And by this point, a couple friends of mine who are pretty techie and went to high school with me were also doing the same research. And so I was very fortunate to be surrounded by just a handful of people that I could ask questions and say, sanity check here. Are we crazy? and so the rabbit hole opened from there. And it was first through Bitcoin. And you saw in a cycle that took place in 2013, there was a number of other assets that come about around this era, Litecoin. There were other clones, Purecoin, Feathercoin, Dogecoin, people are probably familiar with. And
so back then, there were 18,000 now.
But
there was a lot, but there wasn't.
Probably hundreds in the total market cap of all crypto assets might be $100 million. And this is back when there was an exchange called Mt. Gox. I mean, there was no ideas about regulation and commodities or securities. I mean, these were conversations that came way, way, way later. And in those days, one thing that was interesting was that there was a hearing done on broadcast on C-SPAN in late 2013, and Bitcoin at this point is going from $100 up to over $1,000. And it's interesting because the conversations we're having today, and that we're basically having now, is pretty much the same conversation back in late 2013, where they asked every Department of Justice, securities regulators, CFTC, what do you think about this asset class? What is this thing? It kind of keeps popping up on the front page, but we don't know what it is. And one by one, every agency came out By the way, we can just skip to the end of the webinar because here's the thesis. One by one, every agency came out and said, we don't think that you should ban it. We think that this is a new technology that has a lot of potential. And what we need to do is get smart on it, hire new people, build new tools, new infrastructure to monitor and make sure.
2013.
This is back in late 2013. And there could have been one earlier, but this is the first one that I saw. And I went like, oh, wow, this is really interesting, because this conversation around will a government push it away was back then as well.
Right.
And so
I think they probably thought it was going to go away by itself at that point, potentially.
It was kind of going sideways. And actually that C-SPAN hearing, I'm pretty sure the price of Bitcoin went from $400 up to $800 or $900 within a couple hours. And I was on the phone with friends saying, hey, watch it. This is crazy. And so I first fell down the rabbit hole on Bitcoin, and then was part of a local meetup group in Toronto. And Vitalik Buterin was part of the scene there, who was a young guy in the space, and starting in, I guess, around then. Yeah, exactly. and then around then, the idea of Ethereum starts getting floated, and looked at the white paper, and that was just mind blowing, because different than Bitcoin, which I'm bullish on Bitcoin, but there were some technical features to Ethereum that were different than just the Bitcoin clones in 2012 and 2013, right? People were going on GitHub, open source repository for code, and they're taking the Bitcoin code and then tweaking around the recipe and redeploying it. And that's how you got Litecoin and Dogecoin. But they weren't this order of magnitude better or different than Bitcoin. So there weren't communities that really rallied behind those assets in a meaningful way. Ethereum, that says if you make that base layer more functional, something special happened and the community got excited. And so I fell down the rabbit hole on Ethereum. Fast forward a number of years, there was a company being put together in late 2017 as an idea called Ether Capital. And I wasn't involved yet. I joined just after the company went public. And they also recognized that there was something special about Ethereum. Again, nothing against Bitcoin, but that there would be this ecosystem. Yeah. There would be a lot of developer activity. There was so much flexibility and functionality to Ethereum that you could invest in and build infrastructure, around that. I mean, you could do that for Bitcoin too, but we just thought that, Ethereum was something special. And so Ether Capital wanted to go public and be an access point in the capital markets, listed up in Canada, as kind of that beacon amidst all the noise. And this is now as I said, the idea was forming in late 2017. And so you've got the ICO boom going on. So these were people issuing tokens, legal or illegal securities on Ethereum. Bitcoin's going from 3,500 up to 20,000. Ether's going from, I don't know what it was at the start of the year, $60 up to over 1,000. And you had all these tokens, and clearly there was something happening here. Sure. But the question was, what is it going to be, and what is an appropriate access point? So that's why Ether Capital was formed. We're one of the biggest ETH holders in the capital markets. We're the first to stake. We're very excited about that. And we're very focused on base layer infrastructure. I also then advise a number of regulators and try and help them come up with thoughtful policy. And I think that that's important. I spent a lot of time engaging with regulators, policymakers, because there's so much education that needs to be done. The space
comes up all the time.
Has such a crazy lexicon to it, and it's moving a mile a minute. So, it's never been a more exciting time to be in the space. I think that the stakes are higher than ever before, because it's clear that the asset class is here to stay and not going away. So I run Ether Capital. I advise regulators. I'm a member of this thing called the Canadian Web3 Council. Again, trying to be that beacon for policymakers for when they want education, when they're trying to figure out what's happening on a certain asset, they can reach out. So I'm engaged kind of in all different areas of this industry.
Yeah, so I've seen you speak several times. I know you're super passionate about regulation, government policy, let's just get right into it here. And I really wanted to start on different, the title of this is the government's leaning in or getting left behind. Let's not start on the negative side of it. What are the pros for governments actually accepting this, understanding it, and leaning into crypto space?
So I'm going to point out something that seems kind of odd or funny of an advantage here. Where we're at in the world right now is we had this extreme globalization, over the last 50 years plus. And now the question is, well, what is the future of the US dollar going to be? And I'm bringing this up right now because there's just recently a lot of talk about what stable coins are going to be. And it's also said—
We're going to have to touch upon that at some point here too, right?
Well, we can do it right now because, there's also a conversation around central bank digital currencies. And should the Fed issue a CBDC? Will other countries issue a CBDC? And these things, as much as people think that they're isolated from one another, in my view, they're actually linked. And they're linked because if you look at what's happening in crypto, right, you're looking in DeFi and you're looking at all these exchanges, they have stable coins. They have a flavor of a US dollar. Now, the question is, who issues those stable coins? Right. So we can call it a CBDC, we can call it a stable coin, we can call it an algorithmic one or a fiat or collateral backed one. There's different flavors. But the reality is that as you have this now $1 to $2 trillion asset class in just the assets alone, the actual tokens, the quote currency has turned into US dollars. So when people are saying, will the US remain, dominant globally for the quote currency for traditional assets, what's actually happened in crypto is Bitcoin is not the main trade pair on every exchange. And when you go into DeFi, it's not Bitcoin, it's some flavor of US dollars. So it's actually an opportunity for the US to lean in. And then the question really is just what's an appropriate policy and framework to issue those dollars. And that's another thing, and they can figure that out. But that's a real opportunity. The other thing is I always point out when you look at kind of the history of the US in the last 100 years, where has America done well? It's been leaning into technology. It's been leaning into new innovation and forming the Silicon Valley, welcoming those new developers, that young group of talent. What are the jobs of tomorrow going to be? Is it going to be in compliance and surveillance, or is it going to be in coming up with new technologies and being at the forefront of the internet and finance? And that's very much what crypto is about at its core. So I think that there's an opportunity here. I'm not saying in an anarchist way. I'm saying that there's an opportunity for government and regulators to work with industry to say, we recognize that the industry is here to stay. It's not going to go away no matter what we do. Even if we push it out the way China did and said, we don't want Bitcoin in our borders, fine. That mining activity moved very quickly into jurisdictions that welcomed it. And the question is, if it goes away and the US says, well, we're going to stick our head in the sand because it challenges the institutions we have, you can do that, but the activity is not going to stop. DeFi will still be there. People's ability to trade on chain, touch assets, lend, buy, swap, NFTs, metaverse, that stuff's going to continue. It'll just happen in another jurisdiction. So the question is, where are those jobs going to be? Where are the taxes going to be paid? Where's the intellectual stimulation and opportunity for the next generation? So I'm always trying to push people to have these measured conversations, not about destroying the current system, but saying there's something new being built here. And how do we marry these two worlds together? Because that's very important to not push away that next generation somewhere else. And it's easy for the people who are policymakers and, they're perhaps of a different cohort who didn't grow up with internet native technology. They didn't have computers when they were teenagers. They didn't, grow up with the internet. And there's people who are 20 years old right now. They don't know a world without the internet. The idea to them that a bank account isn't accessible or to send a wire, Sunday at 6 p.m. Like, what? What do you mean it's closed? That doesn't make any sense. So to them, the assets are going to be more normalized. They're going to be more comfortable with these assets. They're going to be more comfortable saying my in-game sword from, I don't know, I don't play any video games.
You're lying, but that's okay.
No, actually, so Mario Kart N64 is really the only one I know. But those assets may have some monetary value to them. And they're going to be more comfortable as their wallets become more digital. They don't even have a tap credit card or cash. They might not just hold US dollars. They might have US dollars, tokenized US stable coins, CBDCs, whatever. But they also may have some foreign currency, fine. But maybe they're also holding Bitcoin and some Ether and then some fractionalized NFT. And as markets become more interconnected and liquid, why should you not be able to pay when you go to CVS? Tap your phone or your watch. Why not be able to pay with a fractionalized NFT? That world is coming. The question is, how do we regulate it? How do we regulate it, and how do we say we want those businesses and infrastructure to be built here? That's the opportunity.
It almost seems like we're trying to remap existing regulation, existing rules in finance. So when basically, I think what you're saying is we need to rethink that whole. It may look completely different.
100%. I mean, the Securities Act, early 30s. It may not map one-to-one to the assets we have today. Some of the activities do map, but one thing that I'm constantly trying to push on people thinking about what appropriate registrations would be for certain activities like lending or staking, DeFi, is to recognize if one of the objectives is investor protection, right? That's one of the mandates of a securities regulator, is to understand that a retail investor or even an institutional, maybe not an institutional investor, but a retail investor specifically, they don't look at the world and say, that's a commodity, that's a security.
Yep.
These are terms that lawyers and other people have made up to bucket assets, and for good reason, by the way. I'm not saying that there's bad terms, but what I'm trying to get them to understand is that retail investor is going to find an access point no matter what. And the question is, where is that access point going to be?
Right.
You can give them an access point on a locally domiciled exchange or platform that can help vet out some of the very scammy, garbage, very high risk activity. Or you could say, we're not going to put any of that here because we don't know what the registration is.
They're still going to find a place to do it.
They're still going to find a place to do it. And so then what's going to happen is that investor is going to take possession of the asset, the Bitcoin, the Ether, into a self-hosted wallet. Maybe they don't recognize that there's a different set of risks when they take possession of the asset and do self-custody. And then they go off into DeFi, and maybe they use a good exchange. Maybe they use a very high-risk exchange. Maybe they interact with a contract that has a bug in it. And so that investor, were they better off going off into DeFi? Probably not. The best thing we can do is to come up with policy and say, let's give them an access point here. Let's have the local businesses be able to compete with foreign platforms. Let them vet.
It feels like there's an appetite for that. Like the market wants that. They want guidance. They're not getting, it's like rules. It's like rules by enforcement right now, not by policy.
It is a little bit like that. And I think that regulators, for that 2013 to maybe first half of 2020 era, sat on the sidelines and weren't sure what to do with the space. Also, post 2017, you have this bear market that started at the beginning of 2018. Again, Bitcoin at 20,000 goes down to 3,500, something like that. Ether as well, space contracts. I think most people hoped, if they were on that side, that this thing would just go away. And so they didn't roll up their sleeves and say, it's time to do the homework.
Yep.
But what was clear in that second half of 2020, you had the narrative around COVID, pending or potential inflation. And so you saw this huge move up in the asset class. And it's really only been 2 years since regulators have said, this thing didn't go away. We better get smart. We need to hire new people. And they're still trying to figure out, is this done through enforcement? Is it done through new policy? Who has jurisdiction? Is it CFTC or SEC? Do we form a new agency? I mean, the CFTC was formed because people weren't sure if the SEC would be able to regulate certain activities in an efficient way. And so they formed the CFTC. Maybe we see a crypto regulator form here. I don't know. But the point is, it's only been 2 years, and they're trying to figure out what to do. Now, on the positive, though, what you have seen in the last few months is the Biden administration come out with an executive order calling on specific agencies saying, here are some things we want you to come back to us on. We want you to form.
We see them. They're at these conferences. They show up.
They're at these conferences. And we want this agency, and it's not just about securities and commodities regulator, it's also about tax.
Sure.
What is tax treatment of some of these, not just assets, but activities? It's easy for people to say, well, crypto to crypto trades are taxable. Okay, that's a fine blanket statement, but what about staking? Is that income? Is that a dividend?
Sure.
What about yields? Or what if your staking asset isn't accessible, right? So you're putting up some asset, you're generating yield off it, but maybe there's a lockup on it. At what point would that be taxable? So there's a lot of nuance here that needs to be worked out. And that's why it's so important for industry to work with policymakers, because you can't just throw this blanket statement out there like, all stable coins are
I feel like
bad.
they're trying, though. It seems like the industry is trying to work with policymakers. You're there. There's other, heads of other big companies and exchanges going to the Hill weekly, monthly, trying to educate and talk to them. I feel like they are pushing in that direction.
It's 100% happening. And I think you now have all of the people in government who are working to say, we need to come up with guidelines. We understand that the industry is not going away and that there's a lot at stake here. And we need to get this right. And that's why when I read that executive order, I was actually bullish on it, because people were worried, how negative is this going to be? What are they going to do? And it doesn't mean that everything that comes out of this is going to be great or the right answer, but it's a step in the right direction to helping the local businesses that are doing their best to figure out on their own, right, without guidance, what the appropriate registration is going to be, what activities they can engage in, who it's appropriate to engage in with certain activities. They're doing their best, but they're not always going to get it right. So I think whatever comes out of that, and it'll be, within a few months, I think that they'll have some answers back, and then maybe it takes another 6 months or another year to come out with some guidance. And that may be slower than the industry wants, but it's something. We're on the path, and it is happening. So I'm pretty bullish that in the next year or two, there's going to be clarity. There's more infrastructure. You're going to be able to see, once that guidance is issued, the financial institutions that have largely sat on the sidelines because they're not sure, can they offer custody to their clients? If you're a big bank in the US, are you going to take that risk? Probably not. You're going to wait. But once there's clarity, think of what level of infrastructure, and the intellectual capital that's sitting in those institutions that's frothing at the mouth to participate and to help innovate. They just can't do it yet. But once that happens, that infrastructure that will get built is going to be incredible. And that's why I remain bullish on the space, but with a low time preference. Long term, this space will be great and very important to the future of jobs in a lot of these companies.
And what you mentioned earlier was interesting too, because if people are going to find a way to do it, right? So when I look back at the internet, 30 years ago, there were so many companies, and then certain leaders jumped out in the space and led. So when I look 15 years from now, there's going to be a handful of exchanges that are going to be the leaders, which we're seeing a few of that now. But when it comes to custody, when it comes to staking, when it comes to news, there's so many different industries where no one's kind of peeked their head out as a leader because there's no specific guidance for it right now. And I feel like they're waiting for that. They're waiting for that guidance.
So yes, I agree, but I want to asterisks, throw that in here. We do kind of have some leaders. We do have some news organizations have leaned in. And when you look at the industries, the periphery industries that don't touch the assets direct, I think they have a longer leash to participate. So news, for example, I always say that there's this barbell, this spectrum, where you've got the crypto native activity on one side, the artisanal groups, and then you've got the traditional businesses that are well established, that have very trusted brands on the other. And for something like news, you've seen that there's been some great news outlets formed that are very crypto native, that report exclusively on the space. And then you see the Bloombergs out there who are leaning in and saying, wait a minute, there's appetite for this. There's appetite for good education. This is an exciting space. And we need to report on more than just the price. So news can play on both sides of that spectrum. When you think of something like custody, though, it's really just on that crypto native artisanal side of the barbell that's been able to say, we're going to try and figure out what custody should look like and work with auditors to generate SOC reports and do whatever's appropriate to custody a closed fund, a potential ETF. That side of the spectrum exists. But the financial institutions that sit here, those trusted brands, the equivalents of the Bloombergs, but in the banking world, they haven't really been able to lean in yet. There's been a few who are dipping their toe in the water, but we haven't seen them say, here's an exchange that offers 20 assets. The top 20 by market cap will get listed here, and we want our customers to be able to participate. And that's too bad, because they already have customers in the door. They already have bank accounts, and maybe there's a certain generation that would rather purchase those assets through a traditional banking institution. And right now they're having to walk across the street to a new crypto-based company to participate in the asset class or get directional exposure. So the people who are closer to touching the assets in terms of trading activities, custody, as you mentioned, maybe insurance, they're kind of sitting on the sidelines wondering, like, when do we get some guidance? But that's going to come.
You mentioned a topic earlier, and when we spoke at one of the events that we were at, we got into regulation around cryptos, but also what about the developers? Because that's really the heart and blood of this whole thing, and that business is growing tremendously.
Yeah,
does that need some kind of guidance as well? So about smart contracts.
It does need guidance, because the developers, again, if you go back to what I was saying before about investors who may not think of assets in terms of commodities or securities, a lot of the developers who are young also don't think that same way. They're not saying, is the piece of code I'm writing facilitating a trade between two different potential securities? And by the way, we don't even know which assets are securities exactly. There might be some
time to have that debate.
Well, there's some speculation on this one's a security, that one's definitely a commodity, but there's not been like a hard line in the sand, and I don't know if we'll ever get one. But the reality is that the developers who are writing pieces of code, who are building on-chain DeFi lending and trading activities, they're just writing these pieces of software because they see that this system, specifically Ethereum or a smart contract platform right now, is so expressive. And the thing that was so exciting, by the way, about Ethereum is that if you think about real world infrastructure in binary states, and this is a little bit meta of an example, but I think it helps people understand what's so exciting here. In the traditional world, the state of your account and the things you interact with by default is in the off position, it's closed. So when you open a bank account somewhere, you have a checking account and maybe you want to open with whatever the broker dealer is, an investment account, you have to fill out a bunch of forms and make a bunch of requests to connect these two things together. What Ethereum changed was saying that the state of all accounts is not in these binary on-off positions. It's more in this quantum state where it can be in both open and closed at the same time, meaning your Ethereum account can hold some Ether, it can hold some token, but then you can do this thing called money Legos where someone who wants to build a lending application, you don't have to ask permission to connect your account into that thing. You can just do it.
Right.
And then someone can say, well, now there's this lending protocol that gives you a receipt on the loan that you've done. And now you can take the receipt and someone goes, hey, I can build something with that receipt. When the state becomes open, what happens is all these developers say, we can build all sorts of really interesting tools around that infrastructure where we don't have to ask permission. Right. There aren't checkboxes that we have to fill off first before we go build a piece of software. And so you end up with this incredible and vibrant community hacking around the world. And hacking always sounds like this, scary, they're doing something wrong. But it can also just mean, it seems like a dirty word, but it could just be people at a conference center somewhere in Berlin who for a weekend with a bunch of pizzas around say, hey, can we try and do on-chain insurance to ensure a smart contract from failing? Maybe it works, maybe it doesn't, but they're going to try it. And they don't have to ask permission to try it. And so those developers need guidance as well to ensure that the code that they're writing, is not offside and going to land them in jail. So that's something that's very important. The last thing I would add into this is one thing I always find kind of funny when I talk to people from traditional finance is that they're very in favor of open banking, but then they're anti-crypto. And to me, these are the same things, except one is top down and the other is bottom up, self-composed, more of a mesh network-like structure. So I always find it funny when people say, we want people to have more control over their data. We agree that Web 2 is broken. We don't want everyone housing their data, with these big institutions, these big internet companies. It's like, so you're pro-open banking. Shouldn't we be leaning into crypto then? Because crypto is the disruptor to that Web 2-based model of centralizing all of the communication and centralizing all of the housing of the data and extracting it for advertisements and all that stuff. And so that's an opportunity here. So to me, a lot of conversations I'm trying to help people understand, open banking and crypto have the same ethos. The spirit is still the same. And so, yes, we need to allow the people who are going to build in that space not to be up against these regulatory moats that big institutions who can afford millions of dollars in registrations or certain licenses, we need to find a way to allow them to participate. And again, it's not to say that there should be nothing, that there should be no guidance or regulation, because some people are quick to say, you just want to have
the whole idea.
It's just the Wild West. Well, it is and it isn't. I mean, it's the Wild West in that you have this global group of participants helping build this infrastructure, but also there's a way to give guidance on what appropriate activities would be. And maybe there's light registrations and ways that you can engage in certain activities that a small team of developers are able to, get guidance and say, we can adhere to that. And it's not $5 million just to see if our idea works. Right. How you marry these two things is extremely difficult. I don't have, it's not like I got a magic hat here and I pull it out and I'm like, here's the answer on the table. But I think that is the thing to help people understand is we need these measured conversations to recognize what that opportunity is and say, how do we balance out the objectives of these agencies and these set of rules that all come from a good place, right? Investor protection, efficient capital formation, all that stuff. How do we balance that out and say, maybe we need to get creative about what the solution is going to be, right? Maybe we need to say, there's different ways to achieve those objectives. And maybe we need to put on a new hat and say, the way we've been going about this is good, but maybe it doesn't map one-to-one to this world, as we were saying before. And it might require saying, hey, watching on-chain activity or monitoring for bad behavior, people who are engaging in fraud.
That's in every asset class, right?
It's in every asset class. But the point is that there's different tools in this asset class to achieve the same objective.
Yep.
And so you have companies who are doing on-chain analytics, where they're looking for wallet activity that interact with a known address that's part of a dark market and say, wait a minute, this address interacted a couple times with this other address that we think is flagged or fishy. So when they try and cash out through a local exchange, we need to do some checking into what their activity actually was. So there are ways to do this, but it might look different than what we have in the traditional world where we're pushing everyone into these centralized boxes and saying you can only trade inside of this box.
Right.
This new world might be you can trade and interact on chain, natively with the protocol, but there's going to be new tools that are surveilling how your wallet's interacting with things. And when you come back to cash out to US dollars or whatever, there's a flag in our system that knows your address that's going to say, we need to ask some questions here. So there's ways to achieve this.
How far away are we from real government guidance and education? I mean, it seems like in the last 3 years, it's kind of spiked quite a bit. The interest from the governments is jumped a little bit. You said 2012, it's been 10 years, right? And now it's like the last few years, it seems like there's a lot more focus on guidance, government regulation. How far are we away from it?
No one really has an answer to this. I think that we're getting guidance in two ways. One is hopefully there's actual guidance put out saying, if you want to engage in certain types of activities, here's what would be expected and what licenses and who would be appropriate to facilitate those types of activities or transactions or assets. Then there's also the guidance by enforcement, which is an unfortunate way to go about it, but it is another way to get guidance because you see specifically, what the enforcement action was about, what the settlement was. Here was the outcome of we expect you to now follow up with a certain type of license, and then you get the license. And okay, I guess everyone else who wants to do that will also go and get the same licenses to not get the same enforcement letter. So there's different ways that this is going to come about. I think that as the industry is this moving target, and new verticals emerge. A year and a half ago, 2 years ago, there was no such thing as metaverse and NFTs. I mean, there was, but not where it was in the zeitgeist of everyone walking down the street. Right. Yeah. So the thing that's going to happen first is going to be guidance on the real hot topics. And I think currently stablecoin issuance is one, and regulators are working diligently to figure out, are these assets going to be issued by a trust company, a certain type of banking institution? Is it going to be a corporation who has a relationship with deposits? Yeah, there will be guidance that will come from that. I do believe that. The exchanges and platforms are getting guidance in various jurisdictions. And remember that this isn't just about what one state wants or what the US wants. These are platforms servicing global customers, and they each have their own quirks in their jurisdictions of, well, this European, area wants a certain different type of registration and they're blocking this type of activity. And so these are in parallel conversations that have to be had with multiple governments and multiple regulators and multiple jurisdictions across multiple assets. So I don't know that we're going to get by January 17th, 2023.
It's going to be ongoing.
This is going to be ongoing. What we need to do is prioritize what are the key things that are at highest risk to the industry right now. And I think certainly custody, exchange and platform registrations, and stablecoin issuance are the hot topics, need to get solved sooner than later. Those will likely be the first. I could be wrong, but I think that will be the first, as well as guidance around lending and staking and DeFi yield kind of activities. When developers can figure out what they can and can't do, I don't know. Maybe some of that will plug into what's happening in what we just mentioned, but maybe that comes later. So this, as you were just saying, this is going to be an ongoing discussion. And that's why it's important for these agencies to be hiring people who are crypto native and who are not, anarchists saying, forget these agencies, burn it. That's not good for the industry. That's not good for the agent. That just doesn't advance the conversation. I think it's important that the agencies engage with industry, that they hire the right personnel.
They have to, they need to.
And that the companies, and they're already doing it, that they have legal departments who are smart on the space, that understand the complexities around what the current rules are, what the activity is that they're trying to participate in. And they're trying to say how do we get creative here to do this thing? Can we do it? And they're like, I think we can, but maybe we'll have to check. And maybe they can't launch a product as fast as they want, but they do have departments working on this stuff. And it's just a question of how quickly can they move and how much are they willing to sit in the gray area and push the bar. And you are seeing some foreign platforms say, well, we're going to take one more step out.
Right.
You're standing on the dock. I'm going to dip a toe in the water and see what happens.
See what's out there.
And sometimes it works out well. Sometimes it doesn't. For some companies who have taken big risks, it works out in that maybe they ended up getting what seems like a huge fine, but they ended up with a huge customer base and a bit of a moat against competitors.
And they've helped push policy.
So there's different ways to go about it. Some that is welcome, some that's pushed away. So it's going to be a really interesting couple of years.
Yeah. So we started with the pros. We should probably touch upon the con. I mean, outside of the obvious, from an economic standpoint, what are the risks of governments not leaning into this?
Well, we were saying earlier, right? If you push away those developers and you push away those businesses into other jurisdictions, citizens are going to want to interact with these assets no matter what. The question is,
no matter where they are,
where are they going to do it? And so I don't think you would want, let's say that the asset class continues to grow, over a 5 or 10 year time horizon into a $10 trillion industry. Do you want the custody of those assets to be somewhere in another jurisdiction that you can't control, or it's much harder to control or to sanction or to, domicile the assets back? I don't think that that's an outcome that anyone wants. I don't think that the local citizens who want to participate in the asset class want. I don't think governments want that. And so that would be one con, is to just push all those businesses away, push the assets.
It's going to happen. So
it's going to happen.
Keep it close.
Yeah, and you've seen, countries who have tried, by the way, to push out crypto or
mining or whatever it may be. Right?
Yeah, you've seen Venezuela try and push it out. You've seen India try and ban it. You've seen China, every 6 months there's another news story about it's banned, it's not banned. It's banned, it's not banned. The reality is the citizens are engaging in the activity. People in Venezuela continue to touch those assets because they thought it was still worthwhile, regardless of what the local government wanted. So I think that outright banning it, the con is it's just not going to happen. People are going to have these assets. They are digital bearer assets, right? If you take possession of it into a self-hosted wallet, not through a centralized platform, it's very hard to confiscate it. Doesn't mean that it's impossible and that there couldn't be legal proceedings to do it, but it'd be very difficult to enforce. And you're now seeing new software come about that allows for privacy in transactions and to obfuscate how much you hold and in what address you hold it. And so if you see governments anywhere in the world try and get overly aggressive by trying to push the assets out or confiscate them, you're probably going to start pushing faster or accelerating the development of privacy tools, privacy transactions, having those activities live more natively at the base layer of these protocols. And so that's not good for anyone. Well, it's good in some ways, but it's bad in others. So I think that's a con. We talked about tax. We talked about future job growth. And I think another thing, which I hinted at a little bit earlier, is a lot of people are frustrated with the current infrastructure of the web. They don't like the centralization of their data, their emails, that every website is run through a certain number of servers. Slack goes down the first day. Actually, that was a great thing because it was like, well, guess extra long coffee break today. I'll see you guys tomorrow. But joking aside, most of the internet infrastructure now is being provided by just a handful of companies. And most people in government also are frustrated by that and don't want, big data to exist in just a handful of a few corporations. And so here, the opportunity is to say, well, you don't like that. We all recognize that Web 2, the current internet, is a little bit broken, or it's not our desired outcome of how peer-to-peer communication should exist. And so crypto acts as the potential to disrupt that and say, yes, there are some trade-offs or there are some complexities to regulating it, but it can fix a problem. I guess I'm going back to pros and what the opportunity is again. But that's what the thing is, right? Like I truly do believe that despite the abrasion of change and trying to figure out how to do it, there's just so much potential here. And you can see the amount of intellectual capital that's moving into the space, the amount of capital sitting in venture funds now that are allocating specifically to businesses and companies around the space is just enormous. And so to get bogged down in the day-to-day price swings is just a little misguided because it's too narrow of a worldview. So I think that there's this opportunity here that a big group of people are recognizing can disrupt that Web 2 issue. and do something that's better for humanity, for the world, and it's going to happen. So we have to find a way to make sure that it exists in this jurisdiction.
Yeah, it looks like we're headed in the right direction, but it's going to take some time. We got a bunch of questions on the screen right here, so I want to go through some questions, but I did something different this time. You know, when I'm out talking to clients, there's a big kind of wave, kind of more towards the institutional investor right now. And I asked at some of these events, questions that people knew that I was having this webinar with Brian. So I pre-canned some questions here, some themes that I thought were really interesting. And it was one of the things that came up was people were asking from the institutional investor side, is it possible that governments can actually ban cryptos? Now, if I would have got that question once, I would have been like, scratch that. But that came up a few times.
Yeah, I mean, we've kind of been talking about it. I think that the answer is no, that you can't ban it. You can attempt to ban it, but it doesn't really, do very much. That question is coming up, and I get it a fair amount as well from family offices and potential investment advisors, where they have clients who are interested in the asset class. And if you think about the history of the space, 2009 is the launch of Bitcoin, and prior to kind of 2018 to 2020, that bear market era, the only people who could participate in the space were technologists that were comfortable touching the assets direct, doing self-custody, signing up on an exchange or a platform that may or may not be regulated. But there wasn't an access point for structured products and for the institutional investors. Now what you've seen is there are access points for institutional investors. We're starting by seeing, okay, there's a futures-based ETF. There's some closed funds that
toe in the water, like you said earlier.
They're what?
They're putting their toe in the water, like you said earlier.
Well, that question, though, is investors that haven't put the toe in the water, they've got the bathing suit on, they're standing on, a lot of visual aid here. They've got their bathing suit on and they're going, is it appropriate for me to do this? I don't want to be the guy who jumps in the water and just as I'm jumping in, some guy pulls the plug on the whole pool. And the water. I
was thinking that there were sharks in there, but I like yours. It's safer.
Yeah, yours was more fun, but they're looking to build a position, and whether it's going to be slowly over time, now, later, they don't know. But that's one of their concerns. They hear regulators, saying we're going to come down on the space, we're going to start enforcement, we're going to maybe push this away. This is volatile, and they're scratching their face, their beard, or they're looking at it and saying, like, is this a real risk? Is this a detrimental threat to the asset class? And they don't know, right? They think that, well, what if a central bank digital currency comes about? Will that be the demise of the space? And so I think for those investors, what they can get some comfort around is seeing that executive order again didn't at all hint that we need to confiscate these assets and just push it out of our jurisdiction. They're saying the asset class will exist. What boxes they're put in, not exactly clear. What the registrations of platforms and how structured products get issued, or when certain types of structured products get issued, not sure. But the space is here to stay.
Right. There'll be some growing pains along the way, but it's definitely going to happen.
Correct.
In the essence of time, I do want to do one more. I have a lot of them here, but I do want to do one more because I thought this one's interesting too. Isn't energy consumption an issue with governments that they weigh in on right now?
Yeah. So a couple points on this. The first is, a lot of people are focused on Bitcoin mining, right? This is the energy consumption is mining is people spending electricity and computing hardware to validate transactions on these networks. Most of the cryptocurrencies that exist today use something called proof of stake. Over 50% of all the cryptocurrencies in existence don't use proof of work mining. Ethereum, which is the number 2
big change coming
by asset class, or by market cap, is in transition from proof of work to proof of stake. When that happens, you'll have something like 80% of all the cryptocurrencies being 99.9% more energy efficient than proof of work mining. So that's one thing that not a lot of people are talking about, is what percentage of these assets.
Yeah, I wasn't aware of that myself.
Yeah. And so that's one thing. And then the second thing is, when we're talking about Bitcoin, it's important to think about what Bitcoin miners are actually doing. When you strip this down, they are arbing the cost of electricity. Right? They're spending computing hardware and electricity in exchange to validate this network. And so there's an incentive to get the lowest cost of electricity. And so if you want to go and just plug in the toaster, LOL, joke. If you just plug in the toaster here in Manhattan, or, in a major city where you're paying 10, 11, 12 cents a kilowatt hour for electricity, you're probably not going to be that successful. And so there's, by just market forces, an incentive to co-locate those activities
to cleaner energy.
And we've already started to see a big percentage of the Bitcoin network co-locate to cleaner energy, to businesses that are giving off electricity as a byproduct. I don't know what the specific stat is. I've seen numbers that are 50%. I've seen numbers that are 70%. I don't know what the correct number is or if that's even possible to calculate. But the point is, it is trending in that direction and it will continue to trend in that direction. Will it ever be 100% clean? Don't know. But this is a conversation around just globally. Everything we do uses electricity. Yeah. We're sitting in an office with lights, a TV, a camera, hundreds of or thousands of people in this office. When we talk about energy consumption, the question is, do we think it's a good use of that energy consumption? Sure. Yes, no. And that's a broader conversation about globally all these things we do. Golf courses, watering lawns, plugging in Christmas lights. And so it's too easy to just say, I don't like this asset because I think it uses a lot of electricity.
That's fair.
You got to broaden that question to what is the positive of the asset class? Maybe in the US, we don't think that there's a lot of value in the asset. Go to someone who's leaving Ukraine who can't get access to their bank account and is going to leave with 24 words in their head or a USB stick. They see a lot of value in these networks. So this is, again, like everything we've talked about today, more nuanced than some people would like to admit. And it's important to be measured in how we talk about all of these topics and be thoughtful about the policy that's going to get formed in the next 6 to
You just gave me about 10 new topics for more webinars that I can talk about. But listen, in the essence of time, we could probably talk about regulation, government policy all day. I just want to thank Brian for coming here. I want to thank everyone for joining today. If you have any questions, please add them. We will get to those questions. In addition to that, if you have any topics that you would like us to discuss, please add them to the questions tab as well. We'll get to those. Brian, thanks so much for your time. I appreciate you coming out. We'll do it again soon.
Thank you for having me. Bye, everyone.
Thanks for joining.